Well, hello there. This is Slav Polinski, Slav Polinski Homes, and welcome to this episode of our Home Buying, Home Selling Tips series. Today we are talking with mortgage banker Keith Hoffman of Draper and Kramer, and we're going to talk about down payments. There's a lot of misinformation floating around about what is needed for a first-time home buyer to purchase their home. And so we're going to blow through all the myths regarding that and provide you with enough information so that you can feel comfortable about moving forward with your first home. So let's join in on the conversation. So here I am with mortgage banker Keith Hoffman of Draper and Kramer. Keith, tell us a little bit about yourself before we begin talking about down payments.
Well, I've been in the business about 29 years. I started with a small mortgage company, became a broker for a year, and then decided to go into the business myself. So became a partner in this company and actually sold it probably 10 years ago.
Well, fantastic, 29 years, so you probably know a little bit about the mortgage side of home buying and selling.
Just a little.
All right,
Yeah, just a little.
fantastic. So what I wanted to talk about today are down payments. One thing I'm running into a lot with clients, with especially first-time home buyers and people who are considering buying home, is they have been told that they need 20% down payment on the home they're buying before they should even consider purchasing a home.
You know, I would say they don't have to. There's a lot of programs out there. Fannie Mae and Freddie Mac have a 3% down program. FHA requires a minimum 3.5% down. And VA is no money down, so if you qualify for a veteran's loan, you can get something with no money down. Now, when you have that, you have mortgage insurance. But that's okay because they've lowered the mortgage insurance rates considerably, and it definitely gets you into the home and starts building equity.
With mortgage insurance, are they stuck with that with the life of their loan?
You know, they are not. When they do a conventional loan, when you get to 80% loan to value, so you have 20% equity into your home, you can get rid of the mortgage insurance. You just contact the mortgage company or bank at that time, and as long as you've made your payments on time, they'll go ahead and do that. If you don't do anything, when you get to 78%, they automatically have to get rid of it. So that's one of the things that you can do.
Their monthly payment would drop anywhere from how much?
Anywhere from $32 to $200, depending on how much their original down payment was in percentage-wise.
Oh, that's great information. Now, for the veterans out there with VA loans, is there mortgage insurance associated with that?
You know, they don't have mortgage insurance. They have an upfront funding fee, and that's based on whether you've used that before or not, but there is no monthly, and that's a big difference. Now, FHA does have upfront and a monthly, but many times that interest rate's lower, so it almost equates to an equal amount what you're paying for your housing payment.
For those first-time home buyers that may not have 20%, maybe they're right around that 3% mark, are there any programs to assist them with their down payment, purchasing a home?
That's a great thing. That's a great question because there are a lot of programs now. In Illinois, Illinois Housing Development Authority, IDA, has some great programs that they either loan you money, interest-free, or give you money, and you have to qualify for that. In every state, they have a typical type of loan program for first-time home buyers.
Sure. Yeah. A lot of times you hear floating around the home buying industry, ask the seller to pay for your closing costs or help you with the down payment. Tell us a little bit about that option.
Well, you know, as you know, as a real estate agent, you can always ask the seller to pay part of your closing costs or prepaids. And there are rules and regulations that you can't go over a percentage, but at this point, you can ask them to pay probably all of your closing costs depending on the purchase price and what you're buying, what you're putting down. So you can definitely do that, and I think it's a great way to go. The seller actually takes that off of what they're netting out, and everybody's happy.
So that's great because people that may not have a strong down payment, they do have options available to them to allow them to purchase their first home rather than paying the high costs of rent these days.
You know, I tell you, that's a great way to go. I did a loan the other day for somebody, medical student. They got in with $1,000. That's all they had to put in. They got money from the state. they got money from the closing cost credit, and, you know, everybody was happy. So you can definitely do that, and I would not consider anything but that if you don't have a lot of money.
Sure. Here's the question I have for you. So somebody who's considering buying a home and they want to save up for that 20% down payment, what benefits do they have maybe purchasing now with less down payment than waiting till they have that 20%?
Well, you know, everything goes up. Interest rates go up and down. So do the prices of homes.
Sure.
So if you wait a year and prices go up 5%, you can't get the same house for that
Sure.
same amount of money. So I'm going to say you should sit down with your lender and actually go through the numbers to see if you can do this right now versus a year from now saving your money. When you're looking at something like that, you may not be able to buy the same house, as well as the interest rates fluctuate. So you could be in a little trouble later on.
Thank you very much. And that's one of the first things I always tell my buyers is no matter what you have heard from friends and family, they mean well. Sometimes they don't have all the correct information. Sit down with your lender, like Keith, to really find out where you stand in purchasing your home. And not only what you're qualified for, is what you're comfortable paying on a monthly payment process. You may be qualified for maybe a $500,000 home, but comfortably maybe the monthly payments would equal to a $400,000 home. And that is the difference between just winging it and talking to a professional like Keith Hoffman.
You know, the other thing is when you buy a home today and it appreciates 5%, if you wait a year, you're missing out on that appreciation.
Exactly. Well, a lot of great information here on down payments and how they affect your purchase power. And again, tell us just a little bit of summary. What is the minimum down payment today that a buyer needs to purchase a home?
You can do as little as 3% down, first-time buyers, 3.5% for FHA. If you're a VA borrower, you can put no money down. And there are programs for the states that allow you to get closing cost credits and down payment, so it's pretty easy.
Great. And thanks again, Keith. This is Slav Polinski, Slav Polinski Homes with Keith Hoffman and Draper Kramer in Downers Grove. Make it a great day.
Yeah.